Scott. Thanks so much for allowing me to be part of the podcast.
Most people speak on their throat.
I think you'd be a superstar in the banking industry.
We have not seen any dead bodies in the dumpster.
Tell us one of the dumbest, stupidest things you've ever done in your business career.
You have entered the world of accounting, the place where business dreams and financial reality collide into exciting things like journal entries, debits and credits, and financial statements. Everyday CPA podcasts, helping you and your business better compete, succeed, and win.
This is part one of a two-part series.
Good morning. This is Kelly Coughlin, CEO of Bank Bosun. Hope everybody's doing well. You know, dealing with the IRS for a business or personal tax resolution can be a challenging endeavor. Today we're going to talk about business tax resolution. As we head into the end of the year, I thought it would be helpful for community and regional bankers to hear from an expert in dealing with the IRS and various state taxing authorities. We're not going to focus on tax planning. Rather, we're going to focus on tax liability resolution. That is, the resolution of a business tax liability, that's today's topic, after the IRS has notified you of an amount due. With that, I have on the line, I hope, William D. McConnaughy, a CPA. He's got 28 years of professional tax experience. And he's the twin brother of Matthew McConaughey. No, that's not true. That's a big lie.
That's not true.
That is not true. But it sounds better. He's successfully, that is Bill McConaughey, successfully resolved over 4,000 cases. He's a former IRS revenue agent, beware, and has a master's in taxation and is a CPA. He's got 2 children. His son is in the Air Force. Bravo for that. And his daughter works in the cinema industry. So he's got insider knowledge about how the IRS personnel think or don't think, what pressures they're under, and how to work with them successfully. Bill enjoys automotive racing and collecting. We'll find out what he likes to collect. Money, I suppose. Mixed martial arts and college football. So I think, Bill, you're on the line.
Hi, Kelly. Good morning.
How are you doing?
Good. How are you?
Great. Thank you for joining us on it's a Saturday morning. Bill, you're out in Sacramento, I believe, correct?
Correct. Yes, Sacramento, California.
Great. Well, other than the fact that you're not related to Matthew McConaughey, did I get everything else right?
Everything else is correct.
Great. Anything else you want to add about your personal situation there so the audience gets a better feel for that?
No, the personal bio is pretty good. Right on.
Okay, great. Well, let's dig right into it then. I'm going to start with a question here that it might be fairly obvious to you, but is it fair to say, we're talking about business tax situations here, is it fair to say that a routine business audit is normally the event that would trigger an unplanned business tax liability?
No, I wouldn't say that is usually the reason why there's an unplanned business tax liability. It can be. I mean, it certainly can be. But usually, based on my experience, when there's an unplanned business tax liability, it's usually a result of unforeseeable either business problems that come up with running the business, managing a business, or it could be where there's an unplanned or unexpected personal financial event where the owner of a business needs money to take care of personal matters. And in both cases, what happens is that the business or the business owner will take money that should be set aside for the IRS and use it for other purposes. That's usually why people come up short or businesses come up short owing the IRS money. It's because things come up that nobody can foresee, and they take Uncle Sam's money and put it to other purposes. But yes, an audit can certainly cause an unplanned tax liability, but based on my experience, it's usually other things that come up that nobody can see, and they take Uncle Sam's money, like I said, and put it to other purposes. Oh,
so it isn't the IRS kind of initiating the the finding it's a tax liability creating event that creates a tax liability, and then they have to resolve it. And this is before the IRS is even involved, I suppose.
Yeah, that can happen. Yeah, there's, like I said, there's things that come up where people take Uncle Sam's money and apply it to other purposes that need to be taken care of to either stay in business or to keep personal matters in hand. So based on my experience, that's what I see.
Okay. So you are in the business of helping businesses, and I know you do it with individuals too, but today we're going to talk about businesses. You help businesses resolve their tax liability, correct?
Correct.
Okay. Now, what do you call that space? Is it accounting? What space is that in?
The catchphrases are tax relief services, tax resolution services, back tax help.
Okay.
There's a number of different tags that people put on the industry.
Okay. Now, let's talk about the industry then. There are ads and promotions constantly on TV, radio, print media talking about how to get your tax burden, tax debt reduced. And this is the space you're in. Now, I know that you have an excellent reputation of doing good things for your individual business clients. I know that separately from those and from what you say. But not all your, say, competitors have such an illustrious reputation. Now, why is that? Is it fair to say that your industry is kind of fraught with overpromising, underdelivery, or in some case, kind of incompetence? Or is it mainly taxpayers are unhappy with the outcomes that they get of a, say, challenging set of facts and circumstances, and they end up blaming the tax resolution professional, or is it a combination of those things?
It's a combination of both, but I would say that is a problem with the providers themselves. This industry is full of practitioners that really have no business being in the industry. There's a lot of hot air, sales puffery, I think you call it, where they do overpromise and underdeliver. That is a fact. And the reason why that happens is that the IRS does not adequately regulate the industry.
Do you think they should? Should the IRS get more involved in regulating the industry?
Absolutely, yeah. They're actually required to by law, but like a lot of other things with the federal government, what they're supposed to do and what they really do are two different things. They are required by law to regulate people that engage in this practice, but in reality, there's very light regulation. There have been high-profile cases of very incompetent and dishonest companies that have been shut down, but it's always been state attorney generals that have done it. I can name a couple real high-profile cases. Taxmasters, which was running TV ads all the time out of Texas, they were shut down by the state attorney general. J.K. Harris out of South Carolina is shut down by state attorney general. Ronnie Deutsch here in California, Sacramento, actually right up the street from my office, shut down by the state of California Attorney General's office. So it is a result of a lot of fraud, overpromising, sales puffery, hot air. That's what I call it, hot air.
Yeah. How do you distinguish or separate yourself from that? I mean, I know the industry kind of probably gets tainted, and that brings the industry down somewhat, but that can be true with financial services or any industry, I suppose. But how do you combat that?
The way I've tried to combat it is by having on my website, I list everything that provides credible proof that I'm not like these other companies that have been engaging in overpromising or outright fraud. I have on my website proven actual case closure letters from the IRS that shows in black and white on IRS letterhead exactly what I did for people. There's no possibility of fibbing about it because it's right there in black and white. Here's the letter from the IRS that shows what I did for somebody. I post those for the most positive proof anybody could see that I do what I say I can do for people. And then I also have my license up there. You can see that I'm a licensed tax practitioner by the state of California, the Board of Accountancy, certified public accountant. I'm held to some high standards of practice. and ethical behavior as well. You can also look to how long somebody's been in business. That's a pretty good indication of how successful they're going to be working for you. If they've been around forever, that's probably a pretty good sign that they continue to be there for you as well. And then you can look at a person's complaint record, whether or not there's a long history of complaints or either none or very few. And then you can also look at the fees. The most outrageous companies, the most fraudulent companies, they also typically charge outrageous fees where it's pretty good indication from what they're charging that these people are trying to gouge the public as much as possible and give as little as possible in return for it.
Right. So you went through a litany of things there, and you kind of jumped the gun on me, but I want to be clear and specific. I like lists of things. I'm a CPA. We like things simple and itemized. So what are the top 5 things a taxpayer should look for when selecting an advisor? Now, this podcast isn't intended to be a infomercial for you, but we can stipulate that listeners should contact your office. You can give that contact information here or later on at the end of the podcast. I'll allow you to make a plug for you and your team. So if we stipulate to that and someone doesn't decide to work with you, what are the 5 things that they should look for? List those out for us.
Yes, that comes up once in a while where people that are out of the area will ask me what kind of recommendations I would make if they were going to try to get somebody local. And very first thing I tell them is look for a proven track record. I mean, make the practitioner prove to you that they're able to do what they say they can do. Get the case closure letters. Make them prove that they've accomplished the work that you want them to accomplish for you. And then also look to their licensing. I mean, the licensing required is either A, they've got to be an attorney, or B, a certified public accountant or an enrolled agent. Those are the 3 professional licenses that are qualified to represent people before the IRS: an attorney, a certified public accountant or CPA, or an enrolled agent, which is called an EA. The person should be professionally licensed. And then the third thing I would say once again is how long have they been in business? If the person you're trying to have represent you has only been professionally licensed for a year or 2, or I would say even 5 years or less, that's not long enough. You don't have a long enough experience record to really be adequately qualified to represent people in these matters. They should have at least 5 years and up experience, at least 5 years minimum. And then once again, as I mentioned, check their background or reputation. Do they have a litany of complaints? If they do, that's a pretty good warning sign. Check the fee schedule. I mean, if they're going to charge an arm and a leg, that's another warning sign as well. They're charging too much.
Right. On the complaints and reviews, every provider in just about any industry has negative reviews, and I suspect that in your profession, you're always going to get, even if you're a top quality provider, the nature of the business is such that a taxpayer that's unhappy with the outcome and with bad facts and circumstances that just weren't going to produce a good outcome are going to blame the provider, even if they had given them, a reasonable assessment of the likelihood of success. So you're always going to sustain potentially some negative reviews of people that are going to blame the provider. Is that an accurate statement, you think?
That's somewhat accurate statement, I would say. Yeah, that's human nature. But the way I avoid that is when we have cases where the client's not real happy about it, I explain to them in detail why it is what it is. That this is the law, these are the facts, and you're just stuck with it. This is the situation. This is how much money you have to pay the IRS. The law says they have to pay ahead of other creditors. And when you explain it to people, even the ones that are very unhappy about it, my experience, once again, they come to grips with it and say, okay, well, the guy did the best he could do. And, it's just a situation where, yeah, I'm going to have to pay this. I'm not happy about it, but I can't blame him for it. It is what it is. The law says this, and the facts say that, and then this is what I got to do.
Yeah. In your own practice, do you have a pretty high success rate in reductions? I guess that's the outcome, right, that you're looking for.
Yeah,
Take
that's
it,
all,
reduce it.
Yeah, that's always the goal. The goal is always to see if I can get my clients off with paying as little as possible, and reduction is always the number one goal. It doesn't always turn out that way. Sometimes because of facts, circumstances, and the law, they're going to have to pay what they have to pay. But I'd say most of the time, a high percentage most of the time, 2/3, 3/4 of the time, my clients end up getting a reduction where they don't have to pay the whole thing. Yeah.
Well, I will say you're well credentialed. You've got experience with the IRS, and you're a CPA and a master's in tax at Golden State. That's a pretty good tax program. I knew a couple people that went through that program. That's a good tax program, isn't it?
Oh, it's one of the top in the country. Yeah, it's well recommended.
Yeah. I'm curious, did you start your career with the IRS and then get into tax, or what was the chronology here?
I started my career fresh out of college with the IRS. This was during the, early 1980s, and the country had just come out of the recession. And the IRS was the only job I could find. I actually wanted to go into financial auditing with a large CPA firm, but those jobs were hard to find, so I got on with the IRS, and the rest is history. Actually, turned out I had a knack for it, so I stuck with it.
Yeah. Where did you go to undergraduate school? And you studied accounting there? Yeah.
I graduated from San Francisco State University with my bachelor's degree in accounting.
Right. That's got a good accounting program.
Yeah, that's actually a good business school as well.
Yeah. Okay, so then you spent some time with the IRS as a revenue agent. On where do they start you there normally? They start you on the kind of individual tax side, and then you keep moving up till you're on the small business, medium business, and then big corporate stuff, then international, or is that kind of the progression?
That is, yeah. They start you out with small individual cases and then work you up to larger, more complex individuals, and then move you over into corporations and partnerships.
Okay. And how far did you get into that hierarchy or progression? From there, you went out on your own, set up your own practice?
Yes, I stuck with the IRS for 4 years, moved my way all the way up until the large public companies. I never worked on those, but everything below that, if I had stayed with the IRS, I could have moved into the large public companies, but I wanted to go out on my own. I didn't really care for the, how should I say it, way things were being run at the IRS at that time. I said, I'd rather be on my own and do work the way I see it, that I would like to do it.
Yeah. Let's talk briefly about your thoughts on what's going on in the IRS today and, let's say, the last 3 or 4 years. There's been some pretty interesting scandals that have come out, and if you don't want to talk about this, that's fine, because I know they're not a client of yours, but they're certainly one you don't want to be trashing, I would imagine. But if you're comfortable, I'm curious about what your thoughts are about what's going on with them. I will say, as kind of an outsider, seeing that the IRS is being kind of called on the carpet on things, destroying documents, not able to locate emails. It's been kind of a thrill seeing these guys get a taste of their own medicine a bit.
That's always been an ongoing problem at the IRS, actually. When I first got there, one of the most senior agents there told me that working in this organization, it's so political, and there's always something going on where people are always trying to cover up things, and that's one of the reasons why I couldn't stay there. I just didn't care for the way it was being run, the management, the culture there. So that's one of the reasons why I left. It was too political, and it's always had a long-running history of mismanagement. I don't know if you can remember this, but back not so long ago, there were the so-called Roth hearings in Congress where for almost a year, they hammered the IRS the way they did collections and totally wrote a whole bunch of new laws because the collections were out of hand. So this is a long-running story with the IRS.
Do you think that it's really a valid statement that they target certain types of tax-exempt organizations because of their contrary political perspectives? I mean, I just can't believe that would happen.
They took the Fifth Amendment on it, so I guess it must have happened. Yeah, that can happen. Yeah, that's what I was saying about the political aspect of the people there, the culture, political. It's something that shouldn't be, but it is, and they got exposed last year. What was her name? That Lois Lerner woman.
Yeah. Shocking. Do you think that comes from the top? I mean, we don't have to go too political on this, but do you think it comes down from, the head guy, Obama saying, you know what, I don't like this type of group, let's go after him? Do you think it goes to that level? Is it that pervasive?
We're speculating, but in my personal opinion, yeah, I think it actually came straight down from the White House, but that's one man's opinion.
Yeah, interesting. Well, that's surprising.
Thank you so much, Kelly, for having me. I really appreciate it.
Kelly, thank you very much.
Thank you, Kelly. We'll talk soon.
Thanks for tuning in to the Everyday CPA podcast. We will see you next time.